All right, so we know over the last year, mortgage rates have definitely gone up. And as we are looking towards the future, we are looking at spending at least a good chunk of the coming months in an elevated interest rate market. So what can you do? What are the top things that you can do in order to make sure that you get the best rate on your home mortgage? Stick around, we're gonna get into that today. Hello, Central Maine. It is your realtor, Nick Isgro with eXp Realty. And as I said at the beginning today, we are going to go over kind of the top 4 things that you can do in order to make sure you qualify for the absolute best rate on the mortgage that you're going for. Now, before I get into that, I do want to welcome you here to the channel. If you've never been here before, we cover all things real estate here in the state of Maine, but particularly in the Central Maine market. If that's of interest to you or adds value to your process in the buying and selling of homes, do me a favor, go ahead and like this video, hit subscribe, knock that little alarm bell. You'll be notified every time we put out new content. All right, jumping right into it, because I know none of you want to get the top tier interest rates, particularly in the market that we're in now for interest rates. What are the top 4 things that you want to look at in order to make sure you qualify for the best rate on your mortgage loan? Well, no surprise, coming in right at the top of the list is going to be your credit scores. Your credit score is a compilation of your payment histories, your current outstanding debt, and gives at least a snapshot of where you are in your ability, or at least your willingness, to repay the debts that you have on the books now. Now, when a bank looks at this, they're going to obviously gather a lot more information. They're going to be asking income information, they're going to be running debt to income ratios, but the higher your credit score is, the more confident that bank is going to be, or that lender is going to be, in your ability and your willingness to repay. And I say willingness because that's just as important as your ability. Some people just choose not to pay their bills on time, or it's not a priority for them. When a bank sees that not only do you have the finance to back the loan that you're asking for, but you have a proven history of making those payments on time, prioritizing your payments, getting your loans paid down over time, they're going to have a lot of confidence in you, and that's going to result in getting a better interest rate, or at least the best interest rate that's available to you in whatever loan product you're in. And that actually is going to bring me to the second thing that's going to impact your interest rates, and that's what loan type are you in? Of course, there are some broad categories of loan types. You have conventional loans, you have FHA loans, VA loans, USDA loans, but also among that you have different terms with each loan, and it's going to vary from lender to lender. And this is always why, by the way, I recommend people shop for mortgages on the front end. If you are getting into the market, you're looking to buy and you're looking for that pre-qualification, don't just go to the local branch and grab a pre-qual from them. Shop it around, because you want to make sure that you're working with qualified lenders, which, by the way, if you are looking for one, please just send me a message. I'd be happy to hook you up with one of my preferred lenders who is really savvy in all of these areas. But really, you want to make sure you have the best loan type and that you're looking at the total cost of each loan, and some of that is going to be determined by the loan type, because each of these loan types carries different risk, different perhaps federal government agency backing, and that is going to ultimately have an impact on your final interest rate and the cost of the loan to you. So credit report first, mortgage type the second way that you are going to have an impact on the interest rate of your loan. The third measure that might have an impact on the interest rate or the cost of your loan is the size of the down payment that you're able to make. The size of the down payment that you may or may not be able to make on the loan will have an impact on the interest rate in many circumstances. For example, if you're able to put 20% or more cash down on the home, that's going to give the lender much more confidence in your ability to repay that loan. It's going to show a lot of financial acumen that you were able to get that down payment. The loan to value ratio will give them comfort in the asset that they hold that backs in the event that you would default on that loan. And if you are a current homeowner, by the way, your current home equity in the sale of your home is often going to be something that you could use towards making sure that you get that big down payment, because that's going to have an impact too. This isn't going to be the case with every lender, but that's why, as you're shopping the mortgage around, connect with the lenders that you talk to and ask them how the size of the down payment may or may not impact the interest rate that you're able to get. The last big item that's going to make an impact on the interest rate that you're able to get for your mortgage is the loan term. Now, we've talked about loan types, we've talked about down payment. What is the loan term? The loan term is the amount of time that you choose for the specific loan product to repay the loan. Now, as we know, most mortgages are a standard 30-year fixed rate mortgage, but that doesn't mean that that's always going to be the case. In fact, if you are able to take out a loan for a shorter amount of time, a lot of people will do 10 years or 15 years, for example, for a loan term, you're often or pretty much always going to qualify for a lower interest rate. And that is because for the lender's perspective, you're committing to pay that loan back much faster over time, which means they get their money back over time, which means that there's less extension risk to the bank, to the lender, on the specific loan that's for you. So let's just recap the 4 major things that are going to have an impact on the interest rate for your mortgage. Certainly your credit score, the loan type that you get, the size of your down payment, and the term of your loan. Now, if you are in the market to get a loan right now, like I said, please do feel free to reach out to me. I would love to connect you with any one of a variety of my preferred lenders that I do work with here in the central Maine market and around the state, depending on where you are. Also, if you have any experience with this, maybe you're a lender, maybe you're someone who's just familiar with the loan products, maybe you've been through this and have gone through the options, please go ahead and drop a comment below. As always, guys, if you're in the market and you're just looking for a real estate professional to help you with shopping your mortgage around or any other aspect of the buying and selling process, do me a favor. All of my contact information is in the post below. I promise I'll get right back to you. Of course, as always, I appreciate each and every one of you sticking around to the end of this video, and until the next one, I'll see you next time.